Coming up on Market to Market, the Gray Lady gives the promise of GMOs a poor midterm grade. And the potential for lifting the Cuban trade embargo intensifies the sting of old wounds. Those stories and market analysis with Darrin Newsom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, November 4 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Farmers hope a drought lasts only a few weeks. But the Chicago Cubs and their fans waited 108 years for their World Series drought to end. As those in Cubby Blue revel in the victory, U.S. presidential candidates are making the clubhouse turn. On the sidelines, the economy is waiting for a victory of its own as indicators turn downward. The Creighton University Business Conditions Index declined for the fourth month in a row. Those surveyed expressed concern over the long-term health of the global economy. The Purdue CME Ag Barometer also moved lower as producers worried about the direction of the U.S. agricultural economy. And only 161,000 jobs were created last month. However, the unemployment rate provided one bright spot as it fell to 4.9%. The mirror being held up to rural America's economy fails to show farmers working hard to gain ground. Genetically modified seeds and the products that help them thrive are part of the solution. This week, the EPA returned a tool to producers by reapproving Enlist Duo. The move came after a report stirred some controversy over how well GMO seeds have delivered on their promise. Peter Tubbs reports.
The debate over the value of genetically modified crops, or GMOs, flared up again this week, and both sides tossed their chosen data points at each other. The current skirmish began with an article in the New York Times charging that GMOs have failed to deliver promised gains in crop yields and reductions in chemical use in production agriculture. United Nations data were utilized to compare crop yields in North America to those in the European Union. The final analysis found, on a country-wide level, GMO crop yields have not seen significant yield gains over non-GMO varieties. The report also claims that ag chemical use has increased in the United States, while chemical use has declined in France. Detractors were quick to cite their own data, believing that the topic is too nuanced to make broad, high-level assumptions. They took issue with the study's comparison of the planted acres in the U.S. to those in the EU. Their dataset shows the U.S. has more than twice the amount of farmland when compared to the 27 European member nations. Dr. Robert T. Fraley, Chief Technology Officer at Monsanto, argued there are documented studies backing the benefits of GMO crops. Over the past 2 decades, improvements in seed technology have reduced yield losses from drought, weed, and pest pressure. Agricultural experts also questioned the validity of comparing chemical use on a weight basis without discussing the toxicity of different chemicals. Glyphosate, often marketed under the brand name Roundup, is the primary herbicide used on GMO crops in the U.S., and it is less toxic when compared to the majority of other agricultural chemicals. The lower toxicity and engineered traits have allowed for a greater application on U.S. farm fields. For Market to Market, I'm Peter Tubbs.
Shortly after the 1959 Cuban Revolution, the U.S. enacted a trade embargo on the tiny island nation. Eventually, 11 million people found themselves under socialist rule. But a warming between past Cold War foes has many pushing to lift the 6-decade-old embargo. Limited agricultural trade, possible since 2001, has those on both sides of the Florida Straits seeing the potential for new markets a scant 90 miles away. However, Cuban exiles with claims of their own may stand in the way of throwing the door wide open. Josh Bittner has the cover story.
This was one of my grandfather's assets, which is a Central Nela. It's a sugar mill. Consists of 12,000 acres.
Born in Cuba, Peter Mestre was 5 years old when his family fled Fidel Castro's communist regime for Florida in 1961. Well over 1 million Cuban immigrants now reside in the U.S., holding considerable political clout in places like Miami, the exile community's epicenter.
When Castro took over in 1959, he nationalized all the properties and told all the Americans to leave the country, basically confiscated everything.
Mestre says his grandfather, an American citizen and veteran of World War I and II, went to Cuba in 1920 as an entrepreneur. Eventually, he acquired businesses, property, real estate, and farmland there worth an estimated $4.5 million. But it was all taken away following the Cuban Revolution. And as the U.S. and Cuba meander towards normalization, the issue of unresolved property claims is a major sticking point.
There are a number of fantasies. It's like a Disney world of opposition to this. So I don't spend really a lot of time focusing on that. What I do focus is in understanding better the legal system in Cuba.
Jose Payí is an attorney specializing in land title registration. Like Mestre, his family left Cuba in the wake of Castro's rise to power, but relocated to Argentina. He first practiced law in Buenos Aires and later moved to South Florida. Payí says his knowledge of the parallels in Latin American legal systems and their contrast with U.S. law could lend insight to the challenges ahead.
All countries have a right to take property from foreigners, offering, of course, some kind of compensation for that, and Cuba did. Cuba offered a way of paying that nobody wanted to accept.
According to USDA, America controlled 75% of the arable land in Cuba when Castro's socialist state was established nearly 60 years ago. Diplomatic strain led to Cuban government seizure of all foreign assets on the island nation. In response, the Eisenhower administration cut ties with Havana and imposed a trade embargo, which was later solidified by President Kennedy. The property rights of American residents, farmers, and corporations, along with those of many Cubans who also fled the country, became collateral damage. And under Cuba's Marxist ideology, seized land and property has been redistributed among the state and its citizenry. By the late 1960s, just over 5,900 American companies and private citizens had their legal allegations certified with the Foreign Claims Settlement Commission of the U.S. Justice Department. Restitution totaled nearly $2 billion at the time, which today, with interest, brings the bill to $8 billion. In turn, Cuba's counterclaims for alleged damage done under the embargo, or blockade as they call it, range from $121 to $300 billion.
The result of the vote is as follows: in favor 191, against 0, and abstentions 2. Draft resolution A/71/L3 is adopted.
For the first time in 25 years, the U.S. abstained from voting on a symbolic United Nations resolution to condemn the economic embargo against Cuba, providing continuity with recent Obama administration strides. But only the U.S. Congress has the authority to lift the embargo and allow free trade. Agriculture has had a small taste of it, with limited exports to Cuba allowed since 2001. However, incremental federal lawmaking has made settlement of the U.S. certified claims, along with separate claims by Cuban Americans, a precursor to the embargo's demise.
Every president has underestimated the Castros, I think. Nevertheless, it's good to have plans on the books for the eventuality.
Professor Michael Kelly at Creighton University's School of Law in Omaha, Nebraska, helped design a 2007 blueprint for compensation of expropriated property in Cuba. The report was part of a Bush administration effort to engage a hypothetical future Cuban democracy and recommended either lump sum payment or a bilateral claims tribunal.
What I think they should do is pay it. I mean, they were undervalued at the beginning. The 4.5 million with interest is now worth about 20 million. I think it's fair that you should be compensated.
Claimants like Peter Mestre say Cuba has earned a reputation as a serial debtor by repeatedly reneging on its financial obligations. And Professor Kelly admits monetary claims would likely be offered pennies on the dollar, but adds most companies are more interested in access to the Cuban market.
Most of the bigger claims are corporate claims. For instance, Coca-Cola, if you go to Atlanta and ask them, do you want this old bottling plant back outside of Havana? No, they don't want the bottling plant back. What Coke wants is distribution rights on the island before Pepsi gets there.
While that approach may work for business, some claimants, like Carolyn Chester, who also resides in Omaha, feel left in the lurch.
They also took over the radio stations, TV stations, newspapers.
Of the total $8 billion in claims, she inherited an IOU now worth $2 million. A small sliver of the meager $200 million assertion made by families displaced following the revolution.
My father worked hard for his money, He didn't make his money in Cuba. He lost his money in Cuba. He made his money working for CBS, being a reporter.
Edmund Chester covered the Caribbean and Latin America as a U.S. citizen residing in Cuba. He left for a stint in New York as the boss of legendary journalist Edward R. Murrow, but returned to dabble in telecommunications and purchased 80 acres with plans to start a citrus farm. Instead, he was forced to flee.
My father was a patriot, and that's what I don't understand, is why my government is not going to bat for me, There's a solution to this. All they got to do is figure it out.
Neither the U.S. nor Cuba is eager to pay out the sums each government demands, forcing complex negotiations likely to reach well beyond President Obama's tenure. But absent a resolution, farm and business groups fear potential market share could erode in favor of foreign competitors. For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
Election jitters and continued reports of a record-large harvest made for behavior described by some as treading water. For the week, December wheat gained 6 cents, and the nearby corn contract lost 6 cents. A dead cat bounce gave little hope for strength in the soybean market as the January contract fell 21 cents for the week. Liquidation of long positions pulled December meal $8.50 per ton lower. In the softs, December cotton lost all of last week's gains, moving $2.29 per hundredweight lower. Over in the dairy parlor, December Class 3 milk futures added 83 cents. The livestock sector was mixed as the December cattle contract dropped $1.63. January feeders rose $1.85, and the December lean hog contract shed 65 cents. In the currency markets, the U.S. dollar index tumbled 125 basis points. Crude oil spent another week under $50, plunging $4.68 per barrel, down 13% in 2 weeks. Gold rocketed up $27.70 per ounce, and the Goldman Sachs Commodity Index fell 21 points to finish the week at 349.10. Here now to lend us his insight on these and other trends is one of our regular market analysts, Darrin Newsom. Darrin, welcome back.
Thank you, Mike.
Let's take a look at this wheat market. Darrin Newsom, we've been hanging out around 410 for 3 months, 2 months. Are we putting in a really broad bottom, getting ready for a bounce higher, or have we just found a very narrow range in the Chicago wheat?
Right now, we just have a very narrow range. What possibly could be out there to bottom this market? A month or so ago, we were seeing strong export shipments, even a little bit of export sale interest. That's died out. We still have, I'll get to that in a second. We still have, an issue of way too much supply overall, worldwide, domestically. We'll get the next set of numbers next Wednesday. But I think if wheat's going to rally, the biggest thing that could push it higher would be the fact that non-commercial traders continue to hold a short position. and for no other reason except, as you mentioned at the beginning, this nervousness of the markets with the election coming up on Tuesday. I think you could see some position squaring going on in a lot of markets. And in the case of wheat, that means covering shorts, which could help push the market up a little bit.
Are they still record short, the non-commercials in the wheat market, or have they unloaded some?
They've unloaded some. There was a couple weeks ago where we saw the market put a pretty good spike in. It wasn't anything fundamental, but we saw the market, put a little bit of, put a pretty good spike in. A little bit of commercial short covering. Last week they didn't do much of anything. So now we'll look ahead. Still holding a short going into the election. That could be what pushes this market up a bit.
Okay, corn market. Similar trends there. I know we've been seeing still reports of a large harvest, probably not record large, seems to be the consensus. From a chart perspective, looking at the existing December contract today, what's your expectation as we get into November?
Well, again, we're looking at a 15 billion bushel crop. That's what the estimates are right now for Wednesday. Is it 15 billion bushel? Is it 14.9? Does it really make any difference? It's a lot of corn, and ending stocks are going to be big. That's what we know. What we don't know is exactly what's going to happen with demand, and that's really been the catalyst here, keeping the market from collapsing. We've seen shipments and sales slow down here the last couple weeks. It's kind of a bad sign, but we've been shipping so many soybeans still, it's hard to load. You got X amount of ships that you can load at any one given week. So, the fact that we're moving as many soybeans as we are, really is why we've slowed down a bit in corn. But if we look at the overall picture, we're still way ahead of expected pace right now. So what could happen then is next Wednesday we could see USDA actually decrease its ending stocks a little more than expected by increasing export demand. Not many people are looking for that right now to happen. It's not going to be anything huge, but I do think it could be something that helps hold the market about where it is right now. We're in a short term, on the daily charts, we're in a short-term downtrend. That's not going to last forever. Seasonally, we usually see corn slip from the beginning of November through about the third week of November, and then it starts to go up again. So, we're just in this little seasonal time frame where we back off a bit. We get to the middle part, early to late November, and we could start to see the market move back higher.
Let's look out a little bit farther post January 1 for those that are storing corn, storing a lot of unpriced corn in their bin, lock the door and forget about it. What's the future look like from a technical perspective out that far?
I like the monthly chart for the DTN National Corn Index, National Average Cash Price. It still looks good to me. I look at the basis tables. We're weaker than normal, but we also tend to see basis strength over the coming months. So if the cash index is showing that it's at least sideways on its long-term chart, has a chance of turning up, for whatever reason, the market would be saying that 4-6 months down the road, this market could be in better position than it is right now. What's the danger? Breaking down below those lows. We have to be very cautious with those recent lows that we've set.
Now, the recent lows, you're not talking about the 318 that we touched earlier in the fall. Are you talking about that mid 340s?
No, I'm talking about the 318, somewhere in that 315, 320 area. We break that on the long-term chart, and we've probably got a problem on the markets. Could we get down there? Sure we could. Because corn seems to be very comfortable right now between about 320 and 440. And we're towards the lower end of that. So, we're coming up on a time of year where strong demand, bin doors I think are going to get shut pretty tight. We may be able to push this market up a little bit.
All right. Taking a look over at the soybean market, and you mentioned the exceptional export pace we have seen with beans. Demand has been so strong. We've got a question here from one of our followers on Facebook, and we've got a lot of questions. So if you're a follower, do check us out, the Market Plus, which you can find on our website. We'll get through the rest of these. But Matt in Anamosa, Iowa wants to know, what's the best option for overrun bushels? Do you sell them and buy them back on paper, or do you just take the cash price today?
On soybeans?
On soybeans.
You know, my opinion's changed on this over the last couple months because we saw the Nov-Jan spread widen out to a very strong carry. We've still got a neutral carry in the Jan-March. In the case of soybeans, if I've got some overrun, we're still, we've backed off. We backed off this last week. I'd probably look at selling them, looking at some sort of reownership strategy along the way. And I think it's going to happen here probably by the end of this month, if not a little bit later. I think there's going to be an opportunity to reown some soybeans.
What's the significance to you of the strong carry that's developed between Nov and Jan and the neutral carry persisting Jan to March?
Well, with it happening at the heart of harvest, just as we're working our way through October. That told me that the crop's probably larger than what was earlier projected. That will most likely be borne out next Wednesday. But on the other hand, I know pre-report estimates are looking for ending stocks to go up to 420 million bushels. I don't think it's going to happen. I think we're going to account for some of this demand, this stronger than expected export demand. And I still think down the road, we're going to see soybean ending stocks much lower than where they are right now. So I think there's going to be an opportunity to own some beans. Right now, it's going to be iffy. The market that really looks oversupplied more than the other actually is soybeans more so than corn. So if I need to sell something, I'd probably go ahead and move the beans.
And I think this week we did hit an all-time high on actual shipments of beans.
Yeah.
I mean, phenomenal demand from our international partners.
And that follows up the previous week where it was, that was incredibly high. That was incredibly strong demand. And then we top it off with another. Now, Monday will come along and we'll get our weekly export inspection number, which is as of this past Thursday. And then, next Thursday's shipments report will also be as of last Thursday. So, they're always looking backward, but it's still a good road sign. And it'll be interesting to see if we can keep up this type of demand.
Yeah. Well, speaking of keeping up demand, let's jump down into the cattle markets. We have seen consumers still willing to go out and buy the beef. We're just not necessarily seeing that price come back to the cattle feeder. We did see a little rally, bumped up to 106 and change on live cattle. We've pulled back. What's the bottom on this correction?
Cattle are, and this is probably a statement of the obvious, cattle are difficult because there's no connection. There's no connection between cash and the futures. Futures can run up 106, 107. They can add $3, $3.5, whatever it is. The next day they're down 3.5, 4. There's no connection to the cash market. How low can they go? We've got a sizable, and again, this is something that bothers me. We've got a very sizable non-commercial net long heading into a great deal of uncertainty next week. Could the futures market collapse? Could we go to a new low? Absolutely. We could blow through what we've seen. Will it affect the cash market all that much? Maybe not, because we do have actual demand. We've still got grilling season going on. It's 70s and 80s in parts of the Midwest. We've still got strong demand. So the disconnect between cash and futures could be heightened next week by all of the uncertainty and chaos sure to come, almost positive to come in the futures market.
With the election.
With the election.
So, given that we've got a guarantee of uncertainty, are you a seller as a speculative position in here in the live cattle market, or as a hedge? Would you like to hedge in here at 103, 104?
That's like being asked if you'd like a firing squad or an electric chair. I don't know.
Okay.
I wouldn't be a buyer. I don't want to be a seller. I guess what bothers me is we still have so many long positions in this market. And if we hit a panic, there's going to be a lot of folks trying to sell all at the same time in the futures market.
Right.
In the futures.
In the futures market. In the futures market, in the feeder cattle, we've seen strength here over this past week. What's the connection of the feeder futures to the feeder cash market?
Absolutely nothing. But we saw the corn market futures go down. So by logic, investment traders are going to say feeder cattle should go up. It's a thinly traded market. Again, with cattle, it's one of the problems that we have is that there's not a great deal of connection between the two, cash and futures. So you get these wild swings. It's nothing to see feeder cattle with a 450 move.
Right.
Either direction. Some days both directions. It's a crazy market. What's it mean for the What's it mean for the cash? Probably not much, particularly if we see a market collapse. I don't think the cash is going to follow.
Okay. Now, from a technical trader's perspective, this kind of volatility has to make it hard to find patterns you can trust.
Yeah, particularly when you've got straight down moves like what we see in live cattle and in feeder cattle, because it keeps trying to hint at some sort of bottoming formation if everything else plays out right. But then you increase the volatility, increasing the amount that a market can move over any set period of time. And all of a sudden, those lows that you thought were established, they don't hold.
They blow right through them.
They blow right through them.
Speaking of lows that have held, lean hogs, up $5 last week, holding steady today. Are we finding a new range?
Yeah, I like the way the hog charts look. They do have some of the same threats as the cattle. We've got non-commercial longs going on in the hog markets, but we also, again, still have strong demand. And though there is a problem sometimes between the cash and the futures market and hogs, it's not as pronounced as what we see in the cattle market. So, we've got good demand, we've got cash starting to build. That could be enough to help support the futures market here for another week or two.
Okay. Well, Darrin Newsom, thank you so much for joining us.
Thank you, Mike.
That wraps up the broadcast portion of Market to Market, but Darrin and I will keep the market conversation going, including answering more of your questions during Market Plus, which is available on our website. This week on the M2M podcast, one of our longtime analysts asked the question, how much profit do you want? Get the answer wherever you get podcasts by searching MTOM. And join us again next week when we'll examine how our nation's veterans are serving their country on the farm. So until then, thanks for watching. I'm Mike.
Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.